Good morning. Welcome back. Happy Friday. Beautiful day where I am. Sun is gleaming off the lake, blinding me. So, do the quick little morning prep here so that we are prepared for today, being Friday. First and foremost, I think the most important thing that we should recognize here is volume. The last 2 days has been fairly atrocious. It has been very, very light. Not surprising. I mean, we're getting into, summer trade for sure, the middle of summer trade, or getting into an area where you expect a lot of, the larger volume to taper off. So getting these tight little ranges is going to become more and more, possible. I don't really enjoy trading this type of day. I think especially yesterday, I thought yesterday was a pretty poor trading day. What was a good trading day, though, was NQ. NQ has good range still. There's still money to be made there. There's less headaches as far as sitting there and waiting for your trade to come in. But first and foremost, we're going to start with ES here, just on the left side of the screen, the big profile here. So, I'm going to remark where my all-time high is. One thing about remarking all-time highs for me is I like to, as I'm moving up and the all-time highs are made, I like to just keep them marked for this short time frame, just because I believe you can get some reaction off of them. Not so much for buy or sell opportunities, but more for the fact that, the potential is there for a reaction buy or reaction sell. So, yesterday was a very, very tight range balance day. Wednesday was a decent, trading balance day. I actually thought Wednesday was a great trading vehicle day. And now, we're getting into our Globex session here where, they balance out the Globex session as well. So not a lot of enthusiasm still on the buy side. It still seems like the market is, not too interested in just running this straight up to the moon. As we come in, I'm not really thrilled to be buying anywhere in the ES right now. I think if we pull back towards 49, which is kind of what I was waiting for yesterday, I'd be more enticed to. Now, the issue with that is you pull back to 49 and you will be, ceasing the one time framing. So all of a sudden your daily will stop one time framing. Now, keep in mind, yesterday was like a 10-point range. So take that with a grain of salt. I'm not sure I'm putting a lot onto the fact that, the potential is there to stop one time framing on the daily. So be it. I don't think that has anything to do with changing the overall context of we're just dealing with really, really weak buyers and really, really weak sellers. And a lot of that is known by the fact that, we'd have no real pressure. We have no sell pressure. If there's a real seller in this market, they would just absolutely crush on it because there's no buy volume. It's a lot of retail with larger orders hitting in certain locations. So if you were watching yesterday, 55, if you're watching the tape yesterday, 55, which is just below our point of control from yesterday, which was a very nice prominent point of control, had a ton of orders fill there. So despite the really low volume, there was somebody doing a lot of bigger business at exacting price levels, 55 being one of them. So I'm going to mark off, 55 on my homework sheet here to be aware of, to see what happens if we get down there. I have no interest in trading off of it, though. It's just something that I'm, recognizing and potentially want to watch for how the market reacts there. We continue to mention, or I continue to mention here, as the market moves away from this value area, remember we moved down to the downside, got sucked back up to it. If you move to the upside, you should get that same kind of gravity effect where the market wants to pull back towards 4240 range in order to, look for another bid to push the market higher. So if we do stop one time framing and we do get some sort of light liquidation or heavy liquidation, that's where I would target if I am on the short side, which I don't know if I'll even trade ES today. Or likewise, I would look to potentially buy the market again. That's kind of where I'm at with ES. I'm not super thrilled about any of it. I'm not really sure that I want to be involved with it today. I think any really strong failure above, all-time high, again, will bring a short in for me. But like I said, that would probably be the only trade I would look for, is to potentially sell above 64, 65, 66, based on if there is trapping on the tape or not. Buy side, I'm not sure I want to buy it up here at all unless we open and go and have a pretty aggressive move early. Looking at NQ. Now, we talked about the daily on NQ here. We talked about this trend line this week. Now we're finding, effectively we're trying to find support above the trend line as NQ makes new all-time highs here. And that's going to be what I continue to watch for. Now, any move to the upside, I won't even think about having a strong fade on it until we get closer to the 600 number. And likewise, for the buy side, when I'm looking at my profile here in NQ, what I'm really looking for is a move towards 320 to buy. So we're far away from any area that I'm willing to do a lot of business at. I will take trades as they come. I'm a trader. If the trade sets up based off the tape, I will take the trade. But as far as smart money goes, or where I want to really get involved, I think 320 should continue to work as support. If 320 gives, we could get a more of a liquidation type move. But that's where I want to look to, potentially buy NQ. As far as selling NQ goes, we had a good rally yesterday in E&F period, which got completely sold into, and you had a really strong move to the downside. That's where I want to look to, potentially get in again. But I would rather wait and just see what happens at the 600 number. Again, I've said this before, you don't have to trade every day. So if a trade doesn't set up the way, you planned or you want it, you don't have to get involved. Now, over to R2Y. So R2Y, we talked about this week as well. As soon as we seem to get over this range, it's 2290 to, 2320 area, this is where the seller seems to enter the market. It's happened time and time again here. This is where we sold off from R2Y's all-time high, got above this range, after finding a lot of resistance in here, broke through it, couldn't find a true buyer, snap below, then resistance, and then another attempt, failed, snap below. And now this is at, third strong attempt back over this level. I've said this before, until the market can prove to me that they can keep going here, I want to be on the short side of R2Y in the right areas. So if R2Y opens and starts to move higher, I have levels, the 60 level, the 48 level. Those are areas where I potentially want to engage on the short side. But I do know, from based on the context, the market has struggled above this range. It's struggled up here on the dailies. So the potential for this market to find a seller early and liquidate is exceptionally high as well. So, that's what I'm looking for coming into today. I think all three markets are susceptible to a liquidation event. I think all three markets are susceptible to some selling. The big thing is volume going to come in? If you don't get high volume in A period and B period, don't expect to see some big liquidation event take place. Volume will tell you, who's involved, who you're trading with, and if we continue to get this really, really bad volume here in the NYSE, it's summer trade. This isn't the time to get rich. This isn't the time to attack the ever living out of the market. It's just a time to monitor, observe, and take trades as they come in a patient setting. So that's what we want to do. That's what I want to do. And that's the prep that I'm looking for today, and kind of what my mindset is telling me today. It's Friday. Fridays are generally a bullish day, especially in this market. Doesn't mean we're going to go bullish. Like I said, I think the odds are stacked up for potential of a liquidation. But watch your six, right? There's always possibilities for the market to get carried away and start to move, up. So a quick little check of the numbers today. You got consumer sentiment at 10 a.m. I don't see anything that's going to affect us greatly. I don't see a catalyst in the near future until, inflation actually becomes a problem. One thing I do know is they've really been bigging up this infrastructure deal, which is something I want to pay attention to, because usually when the Fed starts to talk about it, and then, the government starts to talk about it, they're doing it for a reason. And it creates an aura of some sort in the market. Now, do I care? Not really. I'll just trade what's there. I think the market will trade effectively based off of odds, no matter what, whether you have a catalyst or not. But a catalyst itself would cause maybe more of a reactionary sell. But in review, I have my levels. We've talked about the areas I want to do my business. I think the context is very much this is a buy market. But as the market continues higher, it is having troubles continuing that buying, and weakness is creeping in. So that's all for today. Check again. On Monday we'll do this again. If you're ever interested, feel free to check us out at www.tradeuptradingroom.com, where we are, just a bunch of normal traders, professional traders, bouncing ideas, trying to better ourselves each and every day. All right. Take care and have a great day.